Hello everyone, a very good morning, good afternoon, and good evening to all. Myself Vaibhav. In today's session of Market Movers, we will be taking a look on the Nasdaq, which is experiencing sharp downturn after yesterday's fall. Even in today's session, it is now trading on the downside, and as the European session is coming to an end and the US session is underway, we are experiencing further sell off, and I think this is likely to mark a downturn in the short to medium term perspective, and let us see how the technicals will play out. If you consider the trading context for the day, of course the major theme which has been driving the markets from yesterday's US session onwards is the continuous rise of the coronavirus infection, and because of that we saw the California, which is the largest state by economy in the United States, has reimposed some of the restrictions, and that was the immediate trigger for yesterday's sell-off in the U.S. equities, and that sentiments later on prevailed in the Asian trading session and the U.S. European trading session as well. And as the fresh US session has begun, we are experiencing again further sell off. So you can say that because of the fear of second wave of the infection and the resultant downturn in the economic activity, the equities are also facing the heat and are trading lower. If you consider the data rocket, today's data calendar is kind of full. We had data coming in from most of the major economies, starting from China, Japan. We got the inflation data for Germany, and we got the GDP numbers for United Kingdom. Then the industrial production data for the euro area. Again, the economic sentiments for Germany, and then if you consider the North American trading session, we got the CPI numbers for the US as well. So we will not go into the detail of all these numbers. We will simply consider the ZW indicator economic sentiments, which has hit the 5-year high for the Eurozone, and now here for the month of July, it stands at 59.6, which is an improvement compared to the last month's reading of around 58.6. And as I said, this is the best reading which we have seen since almost 2015. So this is showing the revival of the people's expectation regarding the economy, but this needs to be balanced with the changing dynamics of the infection outbreak. So we will have to be careful on that front. And just a while back, we got the CPI numbers, and here, just a tad better than the expectation, we have got these CPI numbers. And if you consider the month on month data, the rise in inflation is at 0.6%, which is also better if we consider the last month reading when it was minus 0.1, and even the year on year numbers are the same, 0.6. Here also the reading is better than the prior month. So because of the extent of economic activity picking up, we had this recovery in the inflation, but we are not really sure how long or for how much time it will last. Things are going to get better or things are going to get worse. This is all uncertain at the current point in time, so we will have to take these things as they evolve. Now, moving on to the technical segment, we will cover the Nasdaq and the USD JPY. Let's start with the Nasdaq's technical outlook. Here, this is the daily time frame chart, and if you look at the chart carefully, this is if this downfall persists, this will be the first instance of two consecutive days closing in red for the Nasdaq, and last time it was in the first half of in May, and since that we have seen whenever there has been a fall in the Nasdaq on the very second day, the Nasdaq has experienced recovery and it has continued to move higher. And as you can see, it has gone on to touch 11,000 levels while starting from the sub 7,000 levels. So this has been a phenomenal run for the Nasdaq, and now even the valuations are looking rich at this point in time. And of course, the tech sector has been one of the beneficiary of this restrictions, and because of that the valuations of most of the tech companies have vaulted higher, and that is also being reflected in the Nasdaq. But as the things stand, these you can say that Nasdaq looks a bit of overstretched. So from the short to medium term perspective, we can even now think about going for short sale trades as and when we get opportunities. And on the lower side, the immediate support is around 10,000. So I am kind of expecting those levels might be reached in coming sessions. So we need to be kind of vigilant to see if we can get any opportunity to go for short sale trades in the Nasdaq. If you consider the 4 hourly chart, here we have this first resistance around 10,500, which was breached in the earlier weeks of July, and then we even saw the Nasdaq getting higher above this second resistance. Now, as the downturn is taking place, we are again seeing some likely support around this zone, but at the moment the Nasdaq is continuing to move lower towards this 10,400 zone. So if we get a break below this, then as I said, we can pretty much expect the fall to extend towards 10,000 zone, and that is our next target zone for any trade which we will be taking in today's or maybe in a couple of sessions onwards. So that is the area to watch out for here. If you consider the regression curve, now the price action has even gone below this lower band of this regression curve, which is of course accelerating and is pointing northward. But as the price action has shifted on the downside, we can expect flattening of the regression curve by maybe tomorrow's session, and then eventually it should even bend on the lower side if the price action doesn't really recover and if the momentum remains on the short sell side. So here, these 200 SMA can be considered a crucial marker. Anything below that for the near term should be considered bearish, and as I have drawn this line by simply joining the prior swing highs and the immediate swing lows, you get a feeling that here the consolidation which we saw in today's session was exactly closer to this prior support zone, and now as you can see this prior support has also given way to further downside momentum, and because of that I am kind of expecting anything below these 100 SMA, which is the zone around 10,700, to be considered bearish. So as long as these things are holding well and the price action is below this immediate resistance zone, I would say that we should adopt a sell on rally approach. So whenever you see, even in today's session, this consolidation zone was an excellent opportunity. But now, as we are doing this session, we have already seen the fall, and the price action has moved really far away from the current consolidation zone. So because of that we need to be careful, and maybe at least for some more hours we may need to sit on the sidelines. But as I said, anything below this 100 SMA should be considered bearish. So from that perspective we can continue to watch out for the price action, and if maybe in the later part of US session or maybe tomorrow if we get any opportunity, then I think that would be an welcome development from our trading perspective, and we can indeed think about going for fresh trading opportunities on the sell side. Now, moving on to the USD JPY's technical outlook. Here is the daily time frame chart, and the USD JPY, which has been range bound for almost 2 to 3 months now, after these sharp moves in the month of March and then in the first half of April, it has been kind of quite weeks for USD JPY, and it has been trading in a narrow range. Even if here you consider the price action for last couple of weeks, you will see that ATR has also come down from almost about 150 pips to just little above 50 pips. So that is also being visible in the decreasing ATR for the USD And in yesterday's session, we saw a recovery happening after getting close to this immediate support zone on two occasions. We have seen USD recover from these 106 levels, and this time around has also been no exception. Of course, this pullback happened on the higher levels around 106.5. But the broader thing is that we indeed have support on the lower side around 106, and that is holding well in this time around as well. So I think we need to be kind of cautious while going for short sale, and maybe for a day or two you can even give up on the idea of going for short sale in the USD GPY. Again, if things turn bearish, then maybe we can think about it, but as of now things are not looking that bearish for the USD GPY. And as you can notice here, this reversal is happening pretty close to these immediate swing lows, so that is making me believe that maybe this time around USD JPY is headed toward this 108 zone, and we should be looking out. We should be keeping an eye on for any opportunity which might come our way if we are vigilant enough for the USD JPY to continue to move higher. So here on the 4 hourly chart, the price action is still in the bearish zone as per the central pivot point, as the price action is below the central pivot point, which is there around 108. And on the lower side, there is a regression curve after due consolidation. It is showing some sign of bending on the upside, but nothing promising. So we have to be cautious, and the immediate support has been of these prior swing lows. So from that perspective, we can indeed look for some scalping opportunities with immediate target coming in around these prior swing highs, which is there around 107.8, or just add more than that. And if we consider these price action, this channel which had formed because of the downward momentum has also given way, and now in yesterday's session we saw a break on the upside, because of which we have this break above the downward channel, and here the USD JPY is hovering close to 200 SMA, which is there around 107.3. So here, as long as the price action is holding above this 100 SMA zone, which is there around 107.1, I would say that USD JPY is looking promising enough for us to get involved on the long trade in the scalping manner. So here the immediate support can be considered this confluence of 50 and 100 SMA, and if the things hold well, if the price action continues to hover in these 200 SMA vicinity, then eventually we will see these 50 SMA crossing above 200 SMA. So that will be added confirmation for us to think about going long in the USD GPY. And on the lower side, 107 zone can be considered as immediate marker. So anything above 107 should be considered bullish enough from the scalping perspective, with a target, as I said, coming around these prior swing highs, and the support coming in around this immediate confluence zone, while the stop loss can be kept just closer to this immediate swing low, which is there around 106.7. So for a stop loss of around 30 to 40 pips, you can indeed think about making around 60-70 pips on the higher side. So that will give you a risk reward ratio of 1 is to 2. So that is not bad from the conservative perspective as well. And as I said, things are looking well, and as I have already shown you, there is some support on the lower side as well. So we can indeed try to see if we can profit from such a scenario, and if things go well as per our anticipation, then of course we will be making money, and if things don't turn out so well, then the loss won't be too high, as we are going to play with the stop loss, and 30 pip stop loss is fair enough. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead. See you tomorrow. Goodbye.